we will reverse charge mechanism. RCM, if you see, is not new in GST law. We had RCM in the earlier law as well. In the earliest law in service tax, also we had RCM. In 2012, specific list of RCM was brought in. So this concept is not new, but why is it so important? Because there are continuous addition of entries in the RCM notification. More entries are being added in RCM. So that is the reason. If you see, is not new in GST law. So that is the reason it becomes important for us to understand reverse charge. Also, lot of times there are misconception regarding the applicability of RCM. Whether you take security charges, whether you take renting of motor vehicles, whether you take ocean freight. So if you see, these are all entries where there is a lot of times there is miscommunication, sorry, misconfusion. Example, import of service. So a lot of time due to the ambiguity in the law, applicability of RCM misses a lot of times. And the whole problem is, if we pay RCM at a later date, you might even lose our right to claim input tax credit. Hence, it becomes important for us to analyze when the liability of RCM arises and whether we pay it properly or not. So with this background, we start our discussion on the topic of reverse charge mechanism. What I will do is I will try to capture all the important services which we deal in day-to-day operations of our business. First, before starting the discussion on reverse charge, what is reverse charge? So this reverse charge is defined in the GST law. Section 2, subsection 98 defines what is reverse charge. It says reverse charge means the liability to pay tax by the recipient of supply of goods or service or both instead of the supplier of goods or service. So if you see here, the liability is pushed from the supplier to the recipient. So in general parlance, if you see, in all indirect tax laws, it is always the supplier who pays tax. It is always supplier who pays tax. In case of reverse charge, the onus of paying tax to the government is shifted from the supplier to the recipient. Now, this reverse charge is not only in India, but in many countries, if you see abroad, this concept of reverse charge is prevalent. So reverse charge definition simply says the liability will be shifted from the supplier to the recipient. Now, who is a recipient? So this definition is also defined in the GST law as to who is a recipient. Section 2, subsection 93 defines who is a recipient. Because we discussed in case of reverse charge, liability to pay will be of the recipient. We need to understand who is that recipient. Section 293 defines means where a consideration is payable for the supply of goods or services or both, the person who is liable to pay that consideration. So the person who pays the consideration will become the recipient. In case of goods, where no consideration is payable for supply of goods, the person to whom the goods are delivered or made available, he will be deemed to be the recipient. In third case, in case of service, where no consideration is payable for the supply of a service, the person to whom the service is rendered and any reference to the person to whom a supply is made shall be construed as a reference to the recipient. So if you see, wherever there is a consideration, the person who pays the consideration will be the recipient as per the definition of recipient defined in the GST law. That's the reason if you see in case of ocean freight, the whole dispute is the supplier of service will be outside the country, the recipient of service will be outside the country, and I, who is the importer, who is importing goods from outside the country, I am being made liable to pay tax as per notification 10 of IGST Act. All those discussion on ocean freight also we will discuss when we come to the respective entry of reverse charge on ocean freight. Just I am trying to give an example as how RCM can be made applicable, because the definition of recipient plays a vital role in the applicability of reverse charge. There are two sections which govern reverse charge. One is section 9.3, another is section 9.4. Similar sections are there in the IGST Act, which is section 5.3 and 5.4. So section 9.3 says reverse charge will be applicable on specified categories of supply of goods or services. I read, the government may, on the recommendation by the council, by notification, specify categories of supply of goods or service or both, the tax on which shall be paid on the reverse charge basis. And the provisions of the act shall apply to such recipient as if he is the person liable for paying tax. So this section says specified categories. See, generally, if you see in your day-to-day practice, in your day-to-day business scenarios, generally people quote 9394 because that is the section which says on what categories tax will apply. So 93 says on specified categories, that is GTA, goods transport service, director services, sponsorship service. So this, under this section, specified category of service will be said, yes, this service is liable to reverse charge. Next, section 9, subsection 4. In this, if you see, the government by notification can specify a class of registered persons who shall, in respect of supply of specified category. So if you see, in this section, they will specify the class of registered persons who are liable to pay 9.4, and also on those specified categories in which they have to pay RCM. The classical example, can anyone of you think whether what type of category or what type of registered person today's date is applicable under section 9.4? See, section 9.4 came from 1st July 2017, but thereafter it was suspended. It was applicable only till 13th of October 2017, where it said any supply of goods or services, if you receive from a registered from an unregistered person, up to 5,000 it was kept not taxable, but above 5,000, any supply of goods or services, if you receive from an unregistered person, it is liable to RCM. It created a lot of hue and cry among the industry. Then the government shifted it, because if you see, any company might have various transactions from unregistered person. A classical example is unloading charges paid by a factory. See, day-to-day unloading charges might easily cross rupees 5,000 per day. So this section said, from if you receive any goods or service from an unregistered person, then RCM was applicable. So that was suspended from 13th October 2017. So can any of you think today's date whether 9.4 is applicable on any types of service or category of registered person? It is applicable on builders. If you see, on builders, they said when they procure goods or services from an unregistered person, then they will have to pay RCM at the rate applicable. If you see, they said up to 80% should be minimum from registered person. But if they do not procure minimum 80% of the supply of goods or services from registered person, then reverse charge should be paid by builders. So section 9.4 today's date, it is applicable on builders when they procure any goods or services under the new methodology, under the new scheme which was brought in for builders without ITC. They said in that scheme, the builders has to pay GST on reverse charge on the procurement of goods and services if they do not procure minimum 80% from registered vendors, whether it is goods as well as service. Many of the builders are facing difficulty because any construction project might have around 30 to 40% of service element, and many of the labor contractors, labor individuals might be unregistered. So section 9.4 is applicable as on today only on the builders category. What is this self invoice? If you see my heading in the slide, it specifies self invoice. If you see section 31, which is invoicing section, section 31 subsection 3 clause F says a registered person. See, this subsection is very important. Many might think self invoice, it's only a procedural formality, but let me say it is not only a procedural formality. It plays a vital role in your claim of input tax credit also. A registered person who is liable to pay tax under subsection 9 or subsection 4 of section 9 shall issue an invoice in respect of supply of goods or services or both received by him from the supplier who is not registered. So if you see, I'm a registered factory. Let's say I'm a factory. I'm manufacturing goods. I receive service from a transporter, GTA, transporter. Transporter is unregistered. If I receive service from him, I will be paying RCM, right? Reverse charge mechanism. I will pay tax at the rate of 5%. However, in this case, I should generate a self invoice also. I've seen practically many entities do not raise a self invoice. If you see, if I receive any goods or service from an unregistered person where I'm paying RCM, I need to generate self invoice. No, many might think RCM from unregistered is not applicable. I agree. Section 9.4 is not applicable. But if you see in section 9.3, they said specified categories RCM will be applicable, provided with irrespective of whether the supplier is registered or not. Classical example is freight charges. As I said, if I am a factory manufacturing goods, and if I am, let's say, supplying goods from Chennai to Maharashtra, I hire the services of a transporter. The transporter might be registered or might not be registered. Both options are possible. In either of the case, whether he is registered or he is not registered, section 9.3 is applicable, because section 9.3 says if any factory receive a service from a towards GTA, transportation service, I only should pay GST under reverse charge, irrespective of whether transporter is registered or not. So what I'm trying to say is, in section 9.3, if a service is covered under RCM, irrespective of whether the supplier is registered or not, depending on the category of service listed, I will be liable to pay RCM. So in my example, if the transporter is unregistered and I'm paying RCM under reverse charge, I should definitely raise a self invoice. That will be the eligible document for me to claim input tax credit. I repeat, that will be an eligible document for me. So it becomes important that you raise an invoice, because it is section 36 says, example, I will come to the next paragraph, what that section says. If you see the second paragraph, credit in the same month. So can we claim input tax credit in the same month? Example, in the month of July, I receive a service from a transporter. So I pay RCM when I file June month return on 20th of July. My question is, can I claim RCM also for June month return, or I can take RCM only after the payment of tax? So that is the reason I've quoted this provision. If you see, Rule 36(1)B says, an invoice issued in accordance with the provisions of section F, clause F of subsection 3 of section 31, that is 31(3), which I've quoted in the first paragraph, as per which I should raise a self invoice subject to payment of tax. So Rule 36(1) says, 36(1)B says, eligible document to claim input tax. What is eligible tax paying document? Eligible tax paying document. Here it says an invoice under Rule 36(1)B. So when I pay RCM and the provider is an unregistered person, example, transportation charges. Example, I receive service from an advocate. Advocate is unregistered. Then I should raise a self invoice. If advocate is registered and I am a business entity, I will pay RCM, but I did not raise self invoice, because advocate is registered. He will give me the invoice. So self invoice is required only if the supplier is unregistered. But because if you see in my first paragraph, I've highlighted this line where supplier who is not registered. So if only my supplier is not registered, I'm required to raise a self invoice. Coming to my next question, can I claim credit in the same month? Example, I receive a transportation service in the month of July and I pay RCM when I file my July return on 20th of August. Question is, can I claim credit in the same month? My view is yes, you can claim, because if you see here, it says that self invoice is the document on which I claim credit subject to payment of tax. So when I file that return, I pay tax in that. So in that same return, I can take input credit also. Unlike in the earlier law where they say the tax paying challan, the TRC TR6 challan is an eligible document to create credit. In GST, it is not like that. It says self-invoice subject to payment of tax. So when I receive service in the month of July, transportation service, I will raise a self-invoice during the time of receipt of service. And when I file the July return in the month of August, 20th August, basis self-invoice, I will pay tax, and the same return I will take input tax credit also. So these are all very important issues which we should take care on the day-to-day scenarios. Might look obvious, but many times mistakes do happen in such cases. Now let me touch a very burning issue. We can call this as one of the critical issues in GST. If you say what are the critical issues in GST, and if you want me to list it out, one of the issue which I will list is this issue which I put in the form of a case study. The question is, a company missed to pay RCM. See why I have posted this case study is, example, you are doing an audit, let's say for financial year 18-19, GST audit for financial year 18-19. And you notice that in one of the transaction, that RCM is not paid. In one of the transaction, the tax under RCM is not paid for financial year 18-19. So now you pay that RCM along with interest. Now you pay that RCM. My question is, if you pay that RCM liability today, can you claim input tax credit? I repeat, a transaction took place in 18-19. You missed to pay RCM. Today, when you came to know, you pay that RCM. Question is, if you pay RCM today, can you claim input tax credit on the tax paid under RCM today for the financial year 18-19? So that is the case study here. A company missed to pay RCM on freight charges pertaining to 18-19. The company discovered it in January 2020. So the company raised a self-invoice in the month of January and paid reverse charge in the month of January. Now, can the company claim input tax credit? See, it was very, very common, if you know, in the financial year 17-18 and 18-19. Because since the law was new, many were not aware, or even though aware, they had missed out to pay RCM on certain transactions. And thereafter, when and where it was discovered, RCM was paid. So this was one of the common issues being raised, whether I can claim input tax credit if I pay RCM at a later date, because we all know time limit to take input tax credit is September month of the next year, due date of filing September month, or date of filing annual return, whichever is earlier. So because of the time restriction, can my RCM credit be denied if I pay at a later date? To discuss the answer, I would like to highlight your attention to the provision of section 16 subsection 2. If you see section 16 subsection 2, to understand this case study, a registered person shall not be entitled to take input tax credit in respect of any invoice or debit note for the supply of goods or services or both after the due date of furnishing return under section 39, which is GSTR 3B, for the month of September, following the end of financial year to which such invoice or debit note pertains. So this line says, this line gives focus to the date of invoice or date of debit note. Please pay attention. This line says following the end of the financial to which the invoice pertains. It does not say to which the transaction pertains, right? So it says to which the invoice or debit note pertains. Now this has a proviso also. That proviso also I will read. This proviso was inserted for the financial year 17-18. For financial year 17-18, the time limit to claim input tax credit was extended till March 2019. So this provider said, provided that the registered person shall be entitled to take input tax credit after the due date of furnishing return under section 39 for the month of September 2018 till the due date of furnishing return under the said section for the month of March 2019 in respect of any invoice to such debit note for supply of goods or services. So what this proviso try to say, that it said you can take credit up to March. But if you see here, I've highlighted one line here. If you see in the middle of the para, any invoice or debit note relating to such debit note for the supply of goods or services are both made during the financial year. My previous slide said with reference to invoice. Here it is trying to say with respect to the supply of goods or services. So if you see the proviso which is inserted is not in line with the provision. The provision in my last slide paid focus to the date of invoice. It said pertaining to the invoice. Here it says pertaining to the supply of goods or services. So if we go by this proviso, the year in which the supply takes place, from that year only I have to calculate the time limit. But if I go by previous slide, it says following the end of the financial year to which the such invoice pertains. So example, can I say like this in my case study? I will go back to my case study. Can I say in this case, although the supply took place in 1819, I generated self invoice in the month of January 2020, and hence since this invoice is generated in 1920 financial year, I should be eligible to take credit up to September 2020 return. I repeat, can I say that if the credit eligibility has to be seen from the date of invoice, then for 1819, the invoice, self-invoice is raised in January 2020. So the time limit has to be calculated from financial 1920. It's a very interesting question. So what do you think? Can I claim or I cannot claim? So if you see, there is one school of thought, because seeing the wordings of this section which reads following the end of the financial year to which such invoice pertains, one school of thought is we can claim input tax credit. However, for delay in generation of self invoice, probably you might have some penalty. But however, claim of input tax credit can be taken. But another school of thought is no, going by the logic of the law, input tax credit cannot be claimed. So in my view, input can be claimed, but I don't deny there can be litigation on this aspect. So it depends on the call taken by person to person. Since the law is not that clear in this, there are two school of thought which is emerging in this. But strictly speaking, as per the intention of the law, no doubt you cannot claim input credit for this case study. However, applying this law very legally, word by word, it seems that yes, there is a loophole in the law, or maybe not loophole, but the wordings of the law gives a different meaning than what is the intention of the law. So since there is no clarity, possible disputes might definitely arise in the times to come. So if you say strictly going by the intention of the law, credit cannot be claimed. However, if someone is claiming, then they should consult the respective consultant to take a call, because at a later date, you might definitely have a litigation for this. So after this interesting issue, let's come to another topic, which is of reverse charge, whether I should take registration. See, if you say section 24 talks about mandatory registration, that means irrespective of your turnover of 20 lakhs or 40 lakhs, minimum turnover limit, you might have to take registration. So one of the point here is a person who is liable to pay tax under reverse charge shall be required to get registered. Shall be means mandatory, required to get registered. So if, for example, let's say I'm a private company, I start my business, my turnover is only 6 lakhs, and I hire a transporter to transport goods. So GTA entry says if a body corporate receives a service from a GTA, from a transporter GTA, then the body corporate has to pay GST under RCM. So here, since I'm a body corporate, although not registered, since I'm attracted by the provision of RCM, section 24 says you please be registered. Basic limit of 20 lakhs or 40 lakhs will not apply. So section 24 says when a person is liable to pay RCM, the basic limit of 20 lakhs or 40 lakhs will not apply. Basic exemption will not apply. A question: can I pay RCM by adjusting against my input tax credits? If you see, let's say I have already input tax credit in my books of accounts worth 50 lakh rupees, 50 lakh rupees, and I have to pay some RCM for the month. Question is, can I adjust input tax credit against my reverse charge liability? Answer is no, because section 49(4) says ITC can be used for payment of output tax only. So we cannot, RCM has to be paid and then only we can claim credit. Input tax credit cannot be adjusted against RCM liability. RCM has to be first paid, then only in cash, then only you can claim input tax credit for the RCM liability. Next is a question basically which says a transporter GTA submits an invoice for rupees 1 lakh to ABC Limited on 1st January 2018. ABC Limited paid GST and reverse charge and took credit in the month of January. So my question here is, GTA gave an invoice in January, the body corporate paid reverse charge and took credit in the month of January. However, the body corporate made payment to the GTA on 6th October 2018 after 6 months period. So my question is whether input is liable to be reversed because payment to the transporter is not made within a period of 180 days. Repeat, as per ITC provisions, if the payment is not made, section 16 subsection 2 proviso 2, second proviso says payment has to be made to the supplier within a period of 180 days. Otherwise, I have to reverse my input tax credit along with interest. So whether this provision will apply here? Answer is no. Second proviso to section 16.2, which says 180 days, it specifically says other than liability paid under reverse charge. So in case of reverse charge, 180 days limit will not apply. What is the time of supply in case of reverse charge? So when I pay disbursed liability and reverse charge, what is the time of supply? Example, if I receive an invoice, see if you see, I hire a transporter today for service, transportation service. My transporter gives me an invoice today. So what is the time of supply when I have to pay RCM in this transaction? So if you see, time of supply says date of payment. If I do not make payment within 60 days from the date of invoice, then 61st day liability will arise. I repeat, date of payment is time of supply. On that date, I have to pay RCM. So let's see the provision also. First talks about time of supply in case of goods. If you see whether RCM is applicable on goods, in case of builder, I already told section 9.4, it is applicable if they purchase goods from an unregistered dealer, RCM is applicable. But if you see normally also, some limited set of goods are given. Example, agriculturist supplies goods to a registered person. Let's say example, tobacco leaves, some products are given. In that case, RCM is applicable. So only very limited set of goods like agriculture dealt by agriculturist, lottery and all those items, RCM is applicable. So time of supply, they said date of receipt of goods or date of payment or 30 days from the date of invoice, whichever is earlier will be the date for time of supply. Next comes to service. As I already said, in case of a service transaction, let's say I receive an invoice from a security provider. I receive an invoice from a rent-a-cab, renting a vehicle, security charges, GTA. In all these cases, if I receive an invoice, let's say in the month of May, but I make payment in the month of June, then time of supply will be in the month of June because date of payment is the time of supply. But however, if you do not make payment within a period of 60 days from the date of invoice, then in that case, time of supply will be the 61st day, because just because you do not make payment up to 80 days, 100 days, 150 days, RCM liability cannot wait. So the government is given a time of 60 days. If you make payment within 60 days, pay liability based on the date of payment. But however, if you do not make payment, 61st day, you please accrue the liability in your books of accounts. So now we come to the another main part of the discussion where we are going to discuss those entries which are liable to RCM. So what we discussed was the background of RCM, registration, input tax credit, till when I can claim input tax credit, all those peculiar scenarios we had covered, when we can take input tax credit, whether in same month, next month, self-invoice. So all these procedural formalities we have discussed, procedural compliances we have discussed. Now what we'll go is we go into each and every entry covered under RCM to understand the nitty-gritties and the impact of RCM provisions. The first entry is import of service. If you receive any service, any import of, if you import any service, import of service, you will be liable to pay RCM. So let's see that entry exactly. What is the nature of service? Any service supplied by any person who is located in a non-taxable territory outside India to any person other than non-taxable online recipient. So if I receive any service in India from a person outside India, then supplier of service will be any person located in a non-taxable territory, and recipient will be any person located in the taxable territory. So if I receive any service from outside the country, then I will be liable to pay RCM. It says any person, recipient of service, if you see, says any person located in the taxable territory. Sometimes business entities miss to pay this tax under RCM. So please notice, any import of service, you will be liable to pay tax under RCM. Now, if you see in the description of service, it talks about other than a non-taxable online recipient. Basically, non-taxable online recipient is defined here. Section 216 of the IGST Act says any government, local authority, any individual, basically any unregistered person. So if you see, except from those, any person who receives service from outside the country will be liable to pay RCM. So the important point here is, example, if I'm a registered entity and I receive any service from outside the country, let's say a company which is a registered entity downloads a software, receives some service outside the country, they will be liable to pay RCM. So let's say example, there's a fault in some of the machinery they have at a factory. So they call an engineer from Japan who comes India and service that machinery. In that case, place of supply will be the place where the machinery is located at the time of supply. So place of supply will be India. Supplier will be outside the country. Recipient is India. So supplier outside, recipient is India. Place of supply in India. It will become an import of service transaction, thereby liable to RCM. So we have to see whether it's an import of service. Now, yeah. So import of service, if you see, import of service means supplier should be outside India, recipient should be in India, and the place of supply of service also should be in India. In my machinery example, all the three categories are satisfied, and hence it becomes an import of service liable to RCM. Generally, we think supplier outside country, recipient in India, it is liable to RCM, but it should be an import of service. So place of supply should be in India to attract RCM. Where and all this import of service is discussed. If you see import of service, whether it is taxable, section 7, which talks about supply definition, supply, section 7, entry B says import of service for a consideration, whether or not in the course of furtherance of business, will be taxable, will be a supply. And entry 4 of schedule 1. Schedule 1 in supply is those transactions in the course or furtherance of business without consideration. In that, entry 4 says import of service by a person from a related person or any of his establishment outside the country is an import of service. So import of service and import of service notification says import of service liable to RCM. Let me take a very interesting case study to drive home this point. Then we will move to the next service. MPL Limited supplies goods to a customer in Singapore. MPL Limited has appointed an intermediary in Singapore for facilitating supplies there. So MPL Limited is in India. They are supplying goods, they're exporting goods to a customer in Singapore. Since Singapore, they have an intermediary, they have an agent intermediary who facilitates the supplies. So in consideration, MPL Limited pays commission to the intermediary in Singapore. So my question is whether it's an import of service, and then whether reverse charge is applicable. This logic will apply everywhere, because see, many times here what I might think, what a person might think, supplier of service is the intermediary who is in Singapore. I am a registered entity, business entity in India. I receive service from him, hence RCM is applicable. But as I said, it should be an import of service. Import of service says supplier should be outside India. In my example, intermediary is outside India, satisfied. Next, recipient should be in India. I am in India, condition satisfied, recipient in India. Third condition says place of supply should be in India. Here Here, if you see intermediaries outside the country in Singapore, place of supply says, look, in case of intermediary service, section 13 says, section 13 of IGST says, which we discussed yesterday in detail with examples. In yesterday's session on place of supply, already we discussed in detail about intermediary. So intermediary service, place of supply with the location of supplier. So in this case, intermediaries in Singapore, place of supply will be in Singapore outside India, and hence this condition will fail to come under import of service. And hence, since it is not an import of service, it will not be taxable under reverse charge. So I need not pay tax in this transaction. So please be careful when you conclude whether transaction is an import or not, import of service or not. If it's an import of service, it becomes liable. In case of import of goods, generally there is no difficulty practically because goods are visible, tangible, it comes through in customs. So automatically there's a system where which customs duties are being levied, collected. But in case of service transaction, since it is intangible, a lot of times confusions do come in and miscompliances take place. So be careful when you treat a transaction as an import of service. Coming to the next category, which is also a very interesting service, which talks about renting of motor vehicle. So this service was inserted in, if you see in the earlier GST law, also we had rent a cab service under reverse charge. In GST till October 2019, we did not have any renting of motor vehicle service under reverse charge. With effect from 1st October 2019, this entry was inserted under reverse charge. So if I receive a service under category of renting of motor vehicle, RCM might be applicable. But there are some criteria to be satisfied under which RCM will apply. So let's see those. The entry reads as services provided by way of renting of any motor vehicle. What is motor vehicle is defined in the Motor Vehicles Act. We already discussed this in detail on our day 3 discussion when we spoke about block credit under input tax credit chapter. So any motor vehicle designed to carry passengers where the cost of the fuel is included in the consideration charged. So it says any motor vehicle, renting of any motor vehicle designed to carry passengers. In this nature of service, the supplier of service should be any person other than a body corporate. I repeat, any person other than a body corporate and does not issue an invoice charging CGST at the rate of 6%. Basically CGST 6, SGST 6, 12%. But since the notification comes under CGST separately, SGST separately, it says 6%, 6%. So basically 12%. So if you see, in this case, renting a motor vehicle, they can also go, they have two options. Either they can go under 5% or 12%. So it says if the supplier does not charge 6%, if he's not charging 12% is invoice, CGST 6%, SGST 6%, then only this entry will apply. So if a person is raising an invoice charging 12%, then he will not come under this category. So he should not be a body corporate and he should not charge 12%. In that case, RCM will be applicable provided if the recipient is any body corporate located in the taxable territory. Please be careful. A lot of time confusions do happen because registered person, unregistered, body corporate, non-body corporate. So applicability might become a confusion at times. So please be careful. Supplier should be any person other than body corporate and recipient should be a body corporate. I will give you some examples also to understand this entry in detail. Let's see the illustrations. In my first case, the service provider is an individual. The recipient is a firm, partnership firm. So what would be your answer in this case? Whether RCM will be applicable or FCM will be applicable. Please be careful. Renting of motor vehicle might be applicable. Many entities, partnership firms, body corporates, all these companies generally many times they might hire renting a cab service for their employees' transportation. Motor vehicle can be a car or can be a bus also, any motor vehicle. So these are very commonly we can find in many corporates. So we have to be careful on the applicability of this RCM. So what would be your answer in all the four cases? First case, provider is an individual, recipient is a partnership firm. So whether RCM is applicable or FCM is applicable in this case. So if you see in this case, the provider is not a body corporate, satisfied. Recipient is a body corporate which fails. If you see, both the conditions should be satisfied. I will go back to my slide. Supplier should not be a body corporate. Recipient should be a body corporate. Only if both the conditions are satisfied, RCM will be applicable. Even if one condition fails, RCM will not be applicable. So I said, please be careful. The supplier should not be body corporate satisfied. Recipient should be body corporate failed. So RCM will not apply. So in the first example, FCM will be applicable. Supplier only should charge GST. Provide other conditions satisfied is turnover and all those criteria. Here we are only discussing about whether FCM or RCM. Second case, supplier is a body corporate. Recipient is also a body corporate. So in this case, whether RCM is applicable or FCM is applicable. Tricky situation. Transporter is all, supplier is also body corporate. Recipient is also body corporate. So if you see here, supplier should not be a body corporate, but supplier is a body corporate. Condition fails, and hence forward charge only will be applicable. The provider will charge GST under forward charge to the recipient. Third case, provider is a firm, recipient is a body corporate. In this case, if you see, both the conditions are satisfied. Provider is not a body corporate and recipient is a body corporate. RCM is applicable. In the fourth case, provider is a LLP and recipient is a body corporate. Yes. So this question becomes interesting because here is the LLP. Many times you have confusions whether LLP is a body corporate or a partnership. So provider is a LLP, recipient is a body corporate, whether RCM is applicable. Answer is yes, RCM is applicable because partnership form includes LLP also. So the provider is not a body corporate, recipient is a body corporate. So RCM will be applicable in the fourth case as well. So if it's in the first two case, forward charge. In the second two case of mine, RCM will be applicable. So please be careful when you apply, make the applicability of RCM in case of renting of motor vehicles. Next comes to insurance service. Insurance service, I think I covered at a later slide also, but anyways, if there is repetition, let's discuss now, and later on when we get the insurance service, we'll skip that time. So if an insurance agent provides a service to an insurance company, person carrying on insurance business, then RCM will be applicable. Sometimes a confusion comes. See, I would like to highlight one more point in my last point of import of service. I gave you a case study of intermediary. Please be careful as to who is an intermediary. Intermediary is a person who facilitates a transaction. See, sometimes intermediary services are confused with business support services. See, a person might be in Singapore in that case, who is facilitating your transaction or who is handling your business operations, who is providing business support services. There's a very thin line with the definition of intermediary and other services. So please be careful whether it's an intermediary or not, because only in case of intermediary, place of supply is location of supplier. So this one point I wanted to add in case of intermediary. Anyways, coming back to our example of insurance agent. So any services provided by an insurance agent to the recipient, person carrying on an insurance business, then reverse charge will be applicable. I think it's a simple point, but only thing to be careful is who is an insurance agent. Now, let's say example, the insurance is a corporate insurance agent, whether RCM will be applicable. So here comes notification 3/2018, central tax dated 25th January defines an insurance agent and takes the meaning from section 210 of the Insurance Act. So who is an insurance agent? We have to go back, travel to the Insurance Act 1938 to see who's an insurance agent. Basically, insurance agent and corporate agent. There is a lot of confusion at times between corporate agent and insurance agent. So insurance agent and corporate agent have different meaning in the Insurance Act. So if it's a corporate agent, it might not apply. Only in case of insurance agent, it might apply. It will apply. So insurance services, insurance company will only pay RCM if they receive services from an insurance agent. Coming to the next service, which is sponsorship service. I might see there might be a lot of sponsorships happening across. See, a lot of times we see a lot of big companies sponsor cricket matches, sponsor big teleserials, sponsor a lot of events. So a lot of programs happens across and corporates keep sponsoring as part of the marketing activities. But major thing you have to take care is one, whether before going inside the entry, always be sure that it's a sponsorship service, because sponsorship is many times misconstrued with respect to advertisement. There is a very thin line of difference between sponsorship and an advertisement service. So always be clear whether it's a sponsorship or not, because in case of advertisement, reverse charge does not apply. Reverse charge will apply only in case of sponsorship service. So it says services provided by way of sponsorship. In that case, supplier of service can be any person, and the recipient can be any body corporate or a partnership firm located in the taxable territory. So if the recipient is a body corporate or a partnership firm, in that case only RCM will be applicable. For the applicability of RCM, supplier can be any person and the recipient has to be a partnership firm or a body corporate. If the recipient is an individual, a proprietor, then RCM will not apply. Here, please notice supplier of service can be any person. Service can be body corporate also. It all depends on who is the recipient of service. Because sometimes they say supplier should be so and so, recipient should be so and so. Sometimes they say supplier should be so and so, recipient can be any person. Here they say supplier can be any person, but recipient should be so and so and so. So we have to be careful on what are the criteria specified for qualifying it to be an RCM transaction. Let's take a case study. MRP Tires Limited sponsors an event of a show named Big Bang. So this is a show named Big Bang. Let's say owned by a company also named Big Bang Limited. The person who is sponsoring the event is MRP Tires Limited. So their name is displayed, their logo is displayed, MRP, and the event is being conducted by Big Bang. In this case, my question is, who will be liable to pay GST, forward charge or reverse charge? The next question is, who is the provider and who is the receiver of service? See, why I'm putting this case study, my main intention here is, many times there's an ambiguity in case of RCM transaction, in case of sponsorship specifically, as to who is the service provider and who is the service receiver. Let's test it now. So if you see, this is the question. MRP Tires Limited sponsors an event for Big Bang. Who is the service provider here and who is the service receiver in your opinion? Who is the service provider? Who is the service receiver? Many times we might take a second to think. I also might take a second to think, because sponsorship comes with that nature of little ambiguity. So what do you think, whether MRP Tires Limited is the service provider or receiver? So that's the whole question. So if you see here, I'll come to the answer. If you see here, recipient is the person who makes payment. That is the reason I went to the basics and discussed the definition of recipient. Recipient is the person who makes payment. If you see here, who makes the payment here? MRP Limited makes payment to Big Bang for sponsorship, right? MRP is sponsoring the event. So MRP will make payment to Big Bang for sponsoring their logo, displaying the logo. So payment is made by MRP Limited. So MRP will be the service provider. Sorry, service recipient. Because I said, right, it takes a second to think. So if you see, service recipient is a person who makes payment, Here, MRP Tires Limited makes payment. So MRP Tires Limited becomes the service recipient, and service provider here is Big Bang. So if the recipient is a body corporate or a partnership firm liable to RCM. In my case, the service recipient, MRP Limited here is a limited company, which is a MRP Tires Limited. Hence, RCM will be applicable. So the whole point here is, be careful who is a provider, who is a receiver. Then see if the recipient is a body corporate or a partnership firm to check the applicability of reverse charge mechanism. Next service is director services. In last 1 month, we had a lot of discussions whether RCM is applicable on payment made on remuneration paid to a director. A lot of discussions have been happening. A lot of the big names, big social media has printed this news, has carried this news that remuneration paid to directors held liable to GST. So there was a lot of confusion and ambiguity in between, because there was a judgment, there was an advance ruling in case of Claycraft Rajasthan Advanced Ruling Authority, which said RCM will be applicable in case of remuneration paid to a director. After this advanced ruling, a lot of discussions started happening in the last 1 month. My view is advanced ruling is basically an agreement between the applicant who makes an advanced ruling and the advanced ruling authority. Although not as per law, but I'm just trying to say the intention, the applicability intention. This is an agreement between both of us. That ruling does not apply to all of us, any of us. It applies as per section 103 of the CGST Act. It applies only to the applicant and the advanced ruling authority and the applicant and the jurisdictional officer in that case. So it's basically an agreement again. But why we discuss advanced ruling at length and breadth across all the forums? Because once an advanced ruling comes in, the problem is maybe others also might start taking the same view, same thought. That is the reason when an advanced ruling comes in, it becomes very famous. It becomes a talk of discussion. Specifically, it is on topic like director's remuneration, which is applicable to almost all the companies. So the service reads as follows. Services provided supplied by a director of a company or a body corporate to the said company or the body corporate. The supplier of service should be a director and the recipient of the service should be a company or a body corporate in the taxable territory. So if director provides service to a body corporate or a company, the company will be paying tax under reverse charge. So we had few advanced rulings on this aspect. The last month it was Claycraft India Private Limited in the case of Rajasthan, where it was told that remuneration paid to directors will be liable to RCM because it is a service provided by them. Directors are not the employees because Schedule 3 says service by an employee to an employer will not be liable to RCM, but the ruling said it will not come under, director will not come under Schedule 3, and hence payment made to him will qualify as RCM. This was not the first advance ruling. In 2019 also we had another advance ruling in case of Alcon Consulting Engineers, where this was ruled that yes, RCM is applicable. However, last couple of days back, few days back, we had another advance ruling in case of Anil Kumar Agarwal, Karnataka Advanced Ruling Authority, which said RCM is not applicable on remuneration paid to full-time, whole-time directors. So in this case, Anil Kumar Agarwal, who is the director who received remuneration, he applied for an advance ruling asking whether company will pay RCM on this amount or not, because whether RCM is applicable or not. So if you see, the whole discussion boils down to one point, whether director is an employee or not. Because if director becomes an employee, Schedule 3 entry 1, no GST. For that, so many times entities think, since they are deducting TDS under section 192, they are deducting TDS section under salary section, RCM will not come. Not so case. You have to ensure that all your documentation and nature of transaction is such that a director becomes a full-time employee of the company. Generally, whole-time directors, executive directors are in the whole-time employment of the company. So the employment contract also makes a big difference in the transaction of RCM. So all your documentation should show that yes, he's a full-time employee and genuinely he should be a full-time employee in the company. So when his salary is being paid to full-time directors under whole-time directors, the executive directors, RCM will not be applicable in my view. And I think strictly in the law also it comes in that way that it should not be applicable. But however, there has been dispute, and probably in future also we might have these disputes continue on this topic of remuneration paid to directors. So if you see, this was the major discussion on this. So in my opinion, when any payment is made to whole-time director, executive directors, RCM will not be applicable because they're in the whole-time employment of the company. But however, if you make any payment to the nominee director, consulting director, or sitting fees to the independent director, on all these payments, RCM will be applicable under reverse charge. Also, I would like to quote to judgments of tribunal in the earlier service tax regime, because this entry was almost there in the service tax regime as well. So in the service tax law, we had two judgments. One was in the case of Allied Blenders and Distillers Private Limited, where in that case it was mentioned, it is crystal clear. I'm reading that paragraph on the screen. it is crystal clear that the directors who are concerned with the management of the company were declared to all statutory authorities as employees of the company and complied with the provisions of the respective acts, rules and regulations indicating the director as an employee of the company. The income tax authorities also assessed the remuneration paid to the directors as salary, which is a fact cannot be ignored. So they said remuneration paid to directors will not come under RCM. A similar judgment was pronounced in the case of Rent Works India Private Limited versus Commissioner of Central Excise, Mumbai. So if you see, these are the two judgments which I wanted to quote, where it was said beautifully, it was analyzed. If you see, someone who wants a clarity further should please go through this definition, the judgment of allied blenders, where they have analyzed in detail about the applicability of RCM on remuneration paid to directors. So these are the two judgments in the earlier regime, judicial pronouncements where they said RCM will not be applicable on the remuneration paid to directors. Coming to our next service, which talks about government services. See, many times, first you have to check whether the service is taxable or not. Because if you see the exemption notification number 12, 2017, central tax, if you see central tax rate, that if you see a lot of services provided by government has been exempt. So first ensure that the service is taxable. Then come to these entries to see whether forward charge or RCM, whether RCM is applicable or not. So it says services supplied by the central government, state government, union territory, or local authority. Out of these four, service provided by them, excluding certain services, which will come in the next slide. So if the service is provided by any of these, then if the recipient is any business entity located in the taxable territory, any business entity, then RCM will be applicable. This entity said RCM will be applicable. Except few services. What those services? If you say them to any business entity, RCM will be applicable, right? So we have to be ensured that the recipient is a business entity for the RCM to be applicable. But primarily ensure that the transaction is a taxable transaction. It is not exempt by notification. However, it will not apply to these services: renting of immovable property, service by Department of Post, service in relation to an aircraft or a vessel, or transportation of goods by road, goods or passengers. So if the government provides any of these services, then in these cases, RCM will not be applicable. This has been excluded specifically. However, if it is an immovable property provided by these four entities, basically by the government, as specified above, if it's an immovable property provided to a registered person, entry 5 of the notification says, if immovable property provided by the government to a registered person, RCM will be applicable. That is the reason if you see here in the first line I mentioned, to an unregistered person. So if the government, state government, central government, union territory or local authority provides renting of immovable property service to a registered person, RCM will be applicable. So coming to the next entry, notification number 10, 2017. Why I'm coming to this notification? Because now we are going to discuss about RCM in case of ocean freight. So for RCM in case of ocean freight, we need to travel to this entry number 10, 2017. See, I will read this service itself. Services supplied. See, this entry is basically of RCM notification in case of IGST. So in case of CGST, the notification number is 13, 2017 central tax rate. In case of RCM, the notification number is notification number 10, 2017 IGST rate. So in that notification, entry number 10 says, services supplied by a person located in the non-taxable territory by way of transportation of goods by a vessel from a place outside India up to a customs station of clearance in India. And if the supplier of service is a person located in the non-taxable territory and the recipient of service is an importer, then RCM will be applicable. If you see here, generally in all the services which we discussed, it was spoken about who is the provider, who is the recipient, supplier, recipient, supplier, recipient. Here it talks about supplier and importer. I will say why. Now I will discuss why they have mentioned this word of importer and not recipient. See, I will just give a background. If you see, let's take a transaction where the supplier of goods is, let's say, in USA. Supplier of goods is in USA, exporter, and I am the importer in India. I import goods from a supplier in US. I repeat, I import goods from a supplier in US. So supplier is in US, I am in India, I'm importing goods. I import this transaction on CIF basis, cost, insurance, freight. In this case, my supply, since my freight cost is already included, my supplier in US will arrange the transporter shipping company from US. Let's say example, it's in US. So he will engage him for shipping the goods from US to India. In this case, freight charges to the shipping company will be paid being in CF transaction from my actual exporter in US. So if you see in that ocean freight which is being paid, the supplier of service is the shipping company in US and the recipient of service is the exporter in US who is making the freight charges payment to the shipping company. So supplier and recipient both are outside India. So legally speaking, this transaction should not be taxed in India because both the supplier and recipient both are outside India. But this notification says, in such a case, see this is the service supplied person located in non-taxable territory and by way of transportation of a vessel, goods by vessel from place outside India to India. And in that case, if the supplier is outside country and the recipient is an importer, RCM will be applicable. Recipient will be deemed to be the importer. So deeming fiction has been made here that the recipient will be deemed to be importer, will be deemed to be recipient and liable to pay GST. Court, if you see the recent judgment in case of Mohit Minerals, they have said that this notification is ultra virus to the act because when the act says both the supplier and recipient are outside the country, you cannot tax this transaction by the provisions of the GST law. How can a specific entry says that no, it will be taxable? If you see in the earlier law, it was said person liable to pay tax. Here it says recipient of service. So I think it's all the more law makes it clear it is not taxable, but this entry 10 of notification 10 specifically carves out the responsibility of the importer to pay tax under RCM. So as per this entry, importer will have to pay tax under RCM in case of ocean freight. So in this case also, if you see levy is becoming twice because double taxation. When I import goods, I already paid tax on those transactions. Again portion of ocean freight, I will have to pay tax again. If you see in CIF transactions, I don't even know the value of ocean freight. So how do I pay tax? I already don't know the value of ocean freight because in my example, exporter in US pays the shipping freight to the shipping company. I don't even know what is the ocean freight. So in that case, notification number 8, which is the rate notification, says, in such case, if the value of the freight is not available with the person liable for paying IGST, the same shall be deemed to be 10% of CIF value. I repeat, if the value is not available, it shall be deemed to be 10% of the CIF value. So example I will give, let's say if the value, CIF value is 1 crore rupees, 1 crore, my import of the value is 1 crore. On 1 crore, 10% they are saying will be deemed to be the value of ocean freight. So on 10 crores, 10% is 10 lakhs. And the rate of GST on RCM on ocean freight is 5%. So 10 crores, 10% the value of ocean freight, which is 10 lakhs. On 10 lakhs, 5% will be applicable, which is on 10 lakhs, 5%, which is 50,000 rupees. So that is the concept of paying RCM. Notification 8 says you deem it value of 10% and calculate RCM. So Gujarat High Court in the recent case of Mohit Minerals, it said the notification number 8 ultra virus to the IGST Act as they lack legislative competency to levy this. The supply of service by transportation of goods, it also held supply of service by transportation of goods by a person in a non-taxable territory to another person in a non-taxable territory up to a place of India is neither an interstate supply nor an intrastate supply. So they also said this, thus no tax can be levied and collected under this transaction. So if you see, there have been a series of writ petitions filed in such a case of ocean freight. So they said importer does not arranges the ocean freight and does not pay ocean freight also to the foreign shipper and also does not avail this service. The importer is not the recipient of ocean freight, hence he cannot be made liable to pay IGST on this transaction. So this was held by the Gujarat High Court in the case of Mohit Minerals. This is a recent judgment. So this has been a matter of dispute from a long time and continues to be a matter of dispute. So whether RCM to be paid on RCM or on ocean freight or not. But however, as I showed, notification number 10 specifically says RCM is applicable in such case, and the person to pay will be the importer. So importer will have to pay tax as per the notification. Coming to the next service of agency service, the first is insurance service, which I've already discussed some time back. The next service is service supplied by a recovery agent. If you see any such service supplied by a recovery agent and the recipient is a banking company or a financial institution or an NBFC, in that case, recipient will be the person liable to pay tax. See, many times the banks might appoint recovery agents in case of failure to pay loans. No, then the bank might appoint recovery agents to recover those monies. So service provided, supplied by recovery agent, the banks, financial institutions will be the recipient of service. They'll be liable to pay tax under RCM. Now let's come to one of the most interesting service, which is GTA, logistics service, GTA service, goods transport agency. Why I'm stressing a lot of importance on this service is, this is applicable to all the people, all the taxpayers who are dealing with goods, whether a trader, manufacturers, dealer, distributor, everyone might have some or the other GTA service. They might hire a tempo or a truck or a trailer or a container. They might hire any service which is transportation of goods. So this service says supply of services by a GTA who does not pay tax at the rate of 6% in respect of transportation of goods by road. I repeat, see, this talks about service by a GTA. Who is a GTA, goods transport agency? We will discuss in some time, where we will discuss the definition of also a GTA. So it says services by a GTA, transportation of goods by road. In that case, RCM is applicable, provided supplier should be a GTA, recipient should be any of the specified category. Those specified category we'll see in the next page. So here one important point to be noted is a GTA has two options. If you see 22nd August 2017, if I'm not wrong, 22nd August 2017, there was a notification in which they said a transporter can pay GST under rate of 12%. So basically, if you see, a transporter has two options. Either he can go under forward charge and charge, either he can go under 12% rate, 6% CGST, 6% SGST, or IGST 12%. Either he can go under 12% option. In that case, this RCM notification will not apply because it says in the bracket who has not paid tax at the rate of 12%. So if a transporter has an option, if he goes under 12%, RCM will not apply. So he will charge forward charge to all his customer at the rate of 12%. Second option is a transporter can adopt 5%. If a transporter adopts 5%, this RCM notification will be applicable and RCM also might apply, where the transporter will not charge any tax and the recipient will pay tax under RCM, the full tax under RCM. So a transporter has two options. Please be careful about this concept because RCM GTA is applicable on day-to-day scenarios, and many times even transport might levy tax incorrectly because of maybe lack of awareness. So please be careful when you are dealing with such transactions. A transporter either can go under 12%. If he adopts 12% and levies in his invoices 2%, 12%, he cannot go under RCM. RCM will not apply. On forward charge, he will charge 12%, and he will be able to take input tax rate also on purchase of trucks, tires, repairs, insurance. On all these things he can claim input tax rate. On his rent of premises, normal ITC he will be able to claim, and he can charge 12% on all his invoices if it is taxable. However, if he goes under 5% option, RCM will be applicable. So the supplier of service should be a goods transport agency. Who should be a recipient in this case? Recipient should be either a body corporate, a factory. See the list in the slide. Provided to a factory, registered under the Factories Act, society registered under Society Act. I've just mentioned the keywords here. A cooperative society, a registered person. It says registered person. So if you're any person who is registered in the GST law, automatically you will come under this clause. body corporate, partnership firm, casual taxable person. So if you see, if the recipient is any of these, then 5% in his invoice. So based all the categories have been covered in the RCM except unregistered individual. Except unregistered individual, because if it's an unregistered partnership firm, it is already listed here. Unregistered body corporate already covered here. Registered proprietor already covered here. So if you see, all the categories are covered under this, but except unregistered individuals. So I think all the categories have been covered under this. So if the recipient is any of these, RCM will be applicable. So with this background, let's understand some very important case studies and get into the detailed provisions of GTA. What is a GTA? Notification 12 2017. Clause ZD defines what is a GTA. It says GTA means any person who provides service in relation to transport of goods by road and issues a consignment note by whatever name called. You can name it LR, lorry receipt, consignment note, anything. But a transporter, GTA is a person who issues consignment note. What is a consignment note? Consignment note is not defined in GST law, but it is defined in the service tax law. That definition I pasted here. Consignment note means document issued by a GTA against receipt of goods for the purpose of transport of goods by road, which is serially numbered and contains the name of the consigner, name of the consignee, registration number of the goods carriage, details of the goods, details of origin, person liable for paying service tax, or since the service tax regime definition, whether consigner, consignee, or the GTA. So if you see, a consignment note is this. So if a GTA issues a consignment note, if a transporter issues a consignment note for transport of goods, he will become a GTA. If a person does not issue a consignment note, he will not be a GTA. He might become a GTO, which is called as goods transport operator. So, example, let's say I hire a tempo for transportation of goods. Let's say a customer is just 2 kilometers away from my premises. I hire a tempo driver. I give him 1,700 rupees to transport goods 3 kilometers to my customers. So in that case, whether RCM is applicable. Generally, the tempo drivers might not issue consignment note. In that case, that will not become a GTA and hence RCM will not be applicable because transportation of goods by road is exempt except GTA. So if it is not a GTA, the transaction will become exempt. Let us discuss this in detail. This is the exemption entry, serial number 18 of notification, exemption notification 12. It says service by transportation of goods by road, except the services of GTA will be exempt. So transportation of goods by road, if it's not a GTA, will become exempt. So in this transaction, if the tempo does not issue a consignment note, the transaction will be exempt under GST and no GST is leviable. A question might arise. So if there is no consignment note, can always we say it's not a GT and need not pay tax? A transporter having a lorry, transport goods, might not issue consignment note. So in that case, can we say, although he's liable to issue consignment note, but just because he do not issue consignment note, I will not pay RCM? So if you see in this case, we have had judgments earlier also. One side of judgment was, since consignment note is not there, no RCM. But however, one set of judgment said, since the supplier is liable to issue a consignment note for transportation of goods by road, just because he is not complying with the laws and not issuing RCM, it cannot be said that RCM will not apply. So we had a series of issues in this. So what I would like to quote here is, department GST CBIC issued GST flyers on certain important aspects. So there's an e-flyer. You can see this e-flyer in the CBIC website also. In the CBIC website, they've listed all the flyers. In that, they've issued a flyer on GTA where they mentioned this para, which I've copied and pasted here. They mentioned individual truck and tempo operators who do not issue any consignment note are not covered within the meaning of GTA. As a corollary, the services provided by such individual transporters who do not issue a consignment note will not be covered by serial number 18 of the notification, which is exempt from GTA. So it all depends whether consignment note is issued or consignment note is not issued. However, when you are going under GTA concept, it might become complicated, because a transaction where a consignment note is not issued already, although it is required to be issued, you cannot say that I have not, no, since there is no consignment note, I will not pay RCM under this transaction. This might become a subject matter of dispute. So my advice would be, if our credit is eligible, maybe an entity might take a stand. If credit is eligible, let them pay tax and take credit. So it's a call basically an entity has to take, because the law is not that clear, because consignment note has to be issued. But if a person is liable to issue consignment note and he still does not issue, can RCM be avoided in that case? Now let's discuss some other interesting case studies in terms of GTM. MRP Limited, registered under GST, appoints a GTA registered under GST. So here, MRP Limited, let's say, is a factory registered as a factory that they're manufacturing goods. They appoint a transporter who is also registered under GST for transportation of the goods. The transporter GST. So in this case, my question is whether RCM is applicable. Pay attention. MRP Limited, the company has a registration. So if you see in this case, let's go to the basic. I said RCM notification will apply if the person is not charging 12%, is not charging 12%. But RCM notification says if the recipient is a body corporate, he will be liable to pay RCM. His recipient is MRP Limited, which is a body corporate, and hence it will be liable to RCM. So this transaction will be covered under reverse charge, but supplier has erroneously charged GST. The transporter has erroneously charged GST. So what happens in this case? The transporter gave me invoice, I paid him the freight charge along with GST. Later on, I come to know that RCM was applicable. So should RCM be paid again? In my view, RCM has to be paid again, because the notification specifically carves out the liability on the recipient of service. And hence, since the recipient is liable to pay RCM, the recipient will have to pay RCM in this case. Otherwise, this might become a subject matter of litigation. Because in litigation, you might definitely say this is a revenue neutral transaction, so and so. But strictly as per law, RCM has to be paid when the recipient is a body corporate. So why I'm quoting this example is, since the law was new and the transport industry, a part of the transport industry is unorganized. So many times might be unorganized. So many times they had levied tax by mistake at the rate of 5%. So in that case, you should be careful that 5% cannot be charged on the forward charge, because RCM notification will apply in such cases. Next question is, TCIP Limited, a transporter registered under GST, does transportation for Maruti Enterprises Private Limited. So the transporter is a body corporate, a big company registered under a transporter, and the recipient is a private company, a newly incorporated company. TCI raises invoice without GST. Whether liability, whose liability is to pay GST in this case? I will repeat. In this case, the transporter is a limited company, TCIP Limited, body corporate, and the recipient is also body corporate, private limited company. But the private limited company is a newly incorporated company. Maybe the turnover is below 20 lakhs. So they are unregistered in GST, 20 lakhs or 40 lakhs, whatever be. So they are unregistered in GST. So my question here is whether RCM will be applicable. Because if you say RCM is applicable, recipient will have to register. Because if you remember, I discussed in the beginning, section 24 says, if RCM is applicable, you will have to register. So if you say in this case, this RCM is applicable, Maruti Enterprises, although the turnover is maybe 6 lakhs or 8 lakhs, newly company, they will have to register to pay RCM in this transaction. But if you say no, then tax under forward charge. So what's your view in this transaction? So if you see here, person body corporate partnership firm. So here, if the recipient is a body corporate, although unregistered, the notification says any body corporate. So body corporate, although unregistered, it will fall under RCM, and Maruti Enterprises in this case will have to register and pay RCM in this example. So we have to be very careful. Many entities might start new business. Now, ongoing coronavirus pandemic, Many companies might start new entities for dealing with security equipments. Example, essential goods, mask, face mask, gloves, and so on so product. So they have to careful. If you are a new entity, if you engage transportation, RCM applicable, you might be liable to get registered. One last aspect in case of transportation, RCM liability under freight might be under CGST. Sometime you might have to pay RCM under IGST. So section 208 of place of supply talks about transportation of goods. It says in case of transportation of goods service, if the supply is made to a registered person, the location of the registered person will be the place of supply. And if the service is to a person other than the registered person, then the place where the goods are handed over for transportation will be the place of supply. Let's understand this further with an example which I've quoted in my slide. If you see, client in Mumbai engages a transporter in Mumbai to pick up the cargo from Chennai and deliver it to Mumbai. So if you see that the client, the manufacturing company in Mumbai, the transporter also is to be in Mumbai, and the transporter has to pick up the material from Chennai and deliver it to Mumbai. So in this case, if the RCM is applicable, let's say it's RCM is applicable, so the client in Mumbai will pay IGST or CGST, because my question is the material is picked up from Tamil Nadu. So what will the place? If you see here, going by your place of supply, if the recipient is registered, that will be the place of supply. So location of supplier is Mumbai, place of supply is also Mumbai, and hence it is an intra-state transaction. CGST and SGST will be have to paid by the recipient. Some might take a view the transporter is picking up material from Chennai, so we'll have to register in Chennai, and then it might become an IGST. In my view, transporter will not register in such a case, so this will become a CGST and SGST transaction. One last example in case of GTA. In case of GTA, as I said, RCM will be applicable. So many times a GTA might have an option, that is some of its turnover might become taxable, some might become exempt. Let's say an example. This is an extract of an income statement of a transporter. Outward supply consists of GTA service for 10 lakhs, warehousing service for 5 lakhs. And for his inward supply expenses side, let's say example, I've just taken an example, random figures. He has GST credit, his GST charged on truck purchase and repair for 5 lakhs, on warehousing rent for 5,000 GST, and on other expenses like audit fees and office rent, he has been charged GST of 10,000 rupees. So my question is, can he claim input tax credit on all these items in this case? Now for that, we'll have to understand whether GTA, he's under forward charge or reverse charge. Let's say he's going under 12% concept. In that case, his entire turnover is taxable. He'll be able to take all the input tax rate in this example. However, if he's under RCM, let's take he's under 5% scheme and RCM notification applies. So entire 10 lakh rupees, he will not pay output GST. The customers will pay reverse charge. But on warehousing services, he will charge tax under forward charge. So part of his turnover 10 lakhs is under reverse charge, 5 lakhs is under forward charge. So now can we take full credit? So if you see in this case, truck purchase and repair is used exclusively for transportation service. He cannot avail full credit, disallowed. Warehousing rent is used for warehousing services. He can take full credit. Section 17 subsection 2 and 3 of ITC chapter that we discussed in detail when we discuss about ITC. It says services covered under RCM will be treated as exempt supply. So in this case, 10 lakhs since covered under RCM will be treated as exempt supply. So the common credit of audit fees and office rent has to be proportionately reversed to the extent of transportation service. So basically it will be 10,000 common credit into 10 lakhs divided by 15 lakhs common credit has to be reversed as per the formula given under Rule 42. Coming to the next service, which is legal service. In case of legal service, it says legal services provided directly or indirectly by an advocate, individual advocate, including a senior advocate or a firm of advocate. And in that case, if the recipient is any business entity located in the taxable territory, then the recipient will be liable to pay GST under reverse charge. The recipient is any business entity. First, you have to see whether the transaction is taxable. If yes, and covered under this, recipient will be liable to pay GST and reverse charge. Legal service means, the description says, legal service means any service provided in relation to advice, consultancy assistance in any branch of law, and includes representational services before any court, tribunal, or authority. So if any services provided of such nature by an advocate, including a senior advocate, and the recipient is any business entity, the business entity will be liable to pay under RCM. So generally, if you see legal entity, many cases, legal services, RCM might be applicable, and the business entity, it does not say body corporate or partnership firm. Any business entity will be liable to pay RCM. Next is arbitral tribunal. If you see services supplied by an arbitral tribunal to a business entity will be covered under reverse charge. So provider is to be an arbitral tribunal, recipient any business entity, it will be covered under RCM. So I think almost we are coming to our end of our discussion on reverse charge. The next category is security services. See, security services came into effect with effect from 1st January 2019. A reverse charge mechanism on security services came with effect from 1st January 2019. Security services was RCM and service tax regime as well. It says security services provided by way of supply of security personnel, except some exceptions which I will discuss in the next slide. In this case, if the supplier of service is any person other than a body corporate and the recipient of service is a registered person, in that case, RCM will be applicable. Since this has been added only a year back, sometimes there be a miscompliance. Many might miss out to pay RCM under security charges, renting a vehicle, etc., because these are newly added. So please be careful. In case of security also, they have given criteria of body corporate, not a body corporate. It says supplier of service should be any person other than a body corporate, and recipient of service should be a registered person. So let us see some examples to see how it will be applicable on a practical basis. As I said, if you see in my previous slide, I said in the down I mentioned exception. So except, it says provided nothing contained in this entry shall apply to a department or establishment of central or state government or union territory or local authority or government agencies, and all the above which has taken registration only for the purpose of deducting section 51, which is the TDS section. So if they've taken registration only for the purpose of TDS, those registrations, they need not, no, they will not come under this criteria. Or also a registered person paying tax under section 10, which is a composition taxable persons. In that case also this entry will not apply. So let's see some examples now. I repeat, provider here should be any person other than a body corporate. So it should not be a body corporate. Registered recipient can be any registered person. So let's say in a case, a company, a provider is an individual and the recipient is an unregistered body corporate. What will be the place of supply? If you want, I will again go back to the slide to show you the provision. Supplier should be any person other than a body corporate, and recipient should be a registered person. So what will be your answer in the first case? Provider is an individual, recipient is an unregistered body corporate. So if you see, the provider should be non-body corporate, he is not a body corporate, satisfied. Recipient should be a registered person, he is not registered, and hence RCM will not apply, FCM will be applicable. I repeat, recipient should be a registered person. It does not say a body corporate or a partnership firm. It only says a registered person, and hence FCM will be applicable. Second, provider is a body corporate, recipient is a registered person, whether RCM or FCM. Provider body corporate, recipient is a registered firm, whether RCM or FCM will be applicable. So here if you see, again let's test. Provider of service should be any person other than body corporate, but here it is a body corporate. First condition is a fails, and hence RCM is not applicable. We need not see who is the recipient. Recipient is satisfied because it's a registered firm, but because provider is a body corporate, one of the condition fails, it will see, because I said no, RCM means both the conditions should satisfy. Here since one of the condition fails, RCM will not be applicable. Again, FCM will be applicable in this transaction. Third case, provider is a firm and the recipient is a registered person. Whether RCM will be applicable or FCM. If you see again here, provider is a person other than body corporate satisfied. Recipient should be a registered person which is also satisfied, and hence RCM will be applicable in the third case. Fourth case, provider is an LLP, recipient is a registered person. So again, LLP, as I said, partnership form includes LLP. So provider is not body corporate and recipient is a registered person. RCM will be applicable. So in this case, if you see provider and recipient both conditions satisfied, and hence RCM, first two case FCM, last two case RCM will be applicable. So friends, this was the major discussions with respect to RCM. I've tried to cover all the important cases, and somewhere where are those disputes also, I've tried to cover those cases also. So this was the first session of 5 days, and this is the last session. Basically, this thought came because some of my clients requested me to take session webinar on some important topics of GST law. So this is how it was started. Thank you all for the wonderful response I got in the last few days. Many texts were received that the sessions are very good. So it's a satisfying experience. I hope all have understood to an extent. It gave some new inputs to all of you on these sessions. So thank you all. Thank you for attending these sessions. Thank you for watching these sessions. Thank you for joining. Thank you.